Hello everyone, welcome to EduTap and welcome to today's session. So today we have the complete March RBI notifications and press releases. So we are going to practice the multiple choice questions. We are going to do the multiple choice question and let's see that how many questions you are able to answer. Okay, so today in just 1 hour we are going to revise, we are going to practice the MCQs that is for the RBI notifications and press releases. Okay, so let's revise the RBI notifications and press releases of March, and in today's session we are going to have the complete revision of the March RBI notification and press releases. Good evening everyone, welcome to the session. So let's get started with today's session with the revision of the March RBI website. Okay, but before that there is a big announcement from EduTap that we have brought for you the never before offer in the history of EduTap. This is for the first time that we are providing such a huge offer, such a huge discount, that is flat 50% off plus additional 25% off. So you can see that this is in the history of EduTap, that is the biggest offer that we are providing because your exams are near, so you need to fast track your preparation. So for that there is the offer that has been provided to you for all these courses that you can see for the RBI Grade B, NABARD Grade A, SEBI Grade A and SEBI Grade A test series also. Okay, and this is valid till today only, that is 3rd May 2024, and this is valid till today. So I hope you will be able to avail this offer by using the code that is save big. Okay, so you can avail this offer by using the code save big, and this is the offer that has been provided by EduTap for your better preparation in this time when the examination is so near. Okay, so I hope you will get this opportunity. Now next let's start with the questions for today, and this is the first question, that is the RBI has recently released a notification regarding the change in reporting for the MTSS for the money transfer service scheme. So the reporting of the information regarding the MTSS has been changed. So you have to tell that which of the following statement is correct in regards to MTSS first of all. So in regards to the scheme, which of the following statement is correct? So try to answer this. So good evening everyone, welcome to the session, and try to answer this question that the MTSS allows for transferring personal remittances from India to beneficiaries abroad. So this is not correct. Okay, this is incorrect because here this is incorrect. Why? Because the remittances, see, under the liberalized remittance scheme, this is the scheme through which the remittance can be sent from India to abroad. But the MTSS is the money transfer service scheme through which from abroad the money can be sent, the remittance can be sent to India. So the first statement is actually incorrect. The MTSS allows for transferring personal remittances from abroad to beneficiaries in India. So if you want to send the remittance from India to abroad, for that you have liberalized remittance scheme. But if you want to send the remittance from abroad to India, so for that you have MTSS. So do not make this kind of mistake. Be very clear that these two schemes are very different. Okay, and the basic idea of these two schemes are different. There is a limit of US dollars 2,500 on individual remittances under the scheme. So that is correct. So this statement is correct, as well as cash payments to beneficiaries in India can be made. So if the beneficiaries that are in India, so from abroad your relatives are sending the money in India to the beneficiaries in India. So the cash payments to the beneficiaries in India can be made under MTSS for amounts up to INR 50,000 only. So this is the idea. Okay. So here the right answer is second and third. The second and third statements are correct. Okay, so here you can see that this is the MTSS money transfer service scheme. This is a way of transferring personal remittances from abroad to beneficiaries in India. Okay, and here the cap is USD 2,500. This has been placed on individual remittances under the scheme. Under the scheme, only the remittances can come for the individuals, that is towards the family maintenance, and remittances favoring the foreign tourists that are visiting in India. Okay, this is not for investment purposes. This is not for donations or any kind of contribution. Only the remittances for the relatives that are living in India, or if you are coming to travel in India, then you can take this money with yourself. Okay, so this is the basic idea. The amounts in the INR is 50,000. That is the limit. So now coming to the next question. So this is the way that has been in the RBI News tab. This is the this is the way that the notification has been provided to you, that shows that what are the changes that has happened, and as well as the MTSS. Regarding the MTSS also, the important information has been provided to you. Okay, so now coming to the next question, that is actually about what the notification is regarding. Okay, so the notification is regarding the recent change that has happened in the reporting of the MTSS. Before, the reporting used to happen through the XBRL. Now the reporting will be happening from the CIMS. Okay, so now the reporting will happen through the CIMS. So you have to tell that which of the following statements are correct regarding the reporting of the information regarding the MTSS. So here I am getting the answer E, and that is absolutely correct, that even if there is no remittance that is received in a quarter, the agent has to provide a report, that is the nil report has to be submitted. Okay, the return code assigned for the statement on CIMS is R130, that is correct. The changes have become effective starting from the quarter ending March 2024. Okay, so this is the information that has been provided. So only the second one is correct. So you can see that before, through the XBRL, the reporting used to happen for the MTSS for the scheme, but now the reporting will happen through the centralized information management system, that is the next generation data warehouse of the Reserve Bank of India. So here the quarter ending, so the reporting will happen through the CIMS from the quarter ending March 2024. The statement has been assigned return code of R130 on the CIMS, and in case no remittance was received during a quarter, a nil report has to be submitted. So this is the complete notification of the Reserve Bank of India that we have discussed. The changes also we have discussed. So here the answer was second, because the answer was E, that is second only, because this was the only correct statement that was present here. Now coming to the next question, that is the third question. So try to answer this question. The Reserve Bank of India has released the directives on arrangement between the card issuers and card networks. So there used to be the arrangement between the card networks and card issuers, due to which arrangement that the card issuers were issuing the cards of only one network and the customers had no choice. So there are 5 card networks, the American Express, the RuPay cards are there, or the Visa cards are there. So you didn't have the choice. You didn't have the choice. The card issuer will only issue the card that the card issuer want to issue. Okay, for the card network belonging to a particular card network. So the card issuers, they had a pact, they had an agreement with particular card networks, due to which the customers were having no say in the card networks. They were having no choice in the card network. So here E, everyone is saying E. So yes, that is the correct answer. So card issuers, now they shall not enter in any arrangement or agreement with the card networks that restrain them from availing the services of other card networks. So they cannot come in any kind of arrangement with the particular card network. Okay. Next is card issuers shall provide an option to their eligible customers. So now the eligible customers have the option to choose from multiple card networks. Let's say that you want RuPay card network, so you would demand for RuPay card network. Okay, so that is the choice that the customers have now. As well as for existing card holders, they will also get the choice. This option may be provided to them at the time of their next renewal. So that is, the third statement is incorrect. The next is directions above shall not be applicable to the credit card issuers with number of active cards, that is 10 lakh or less in number. So that is the basic idea. So here the third and fourth statements are incorrect and the first and second are correct. So you are asked about the incorrect statements. So third and fourth are incorrect. So everyone has given the answer A. So that is correct. Okay. So we have discussed about this. You can see that card issuers, they shall not enter into any particular agreement with the card networks that restrain them from availing the services of other card networks, as well as for the when you are doing the renewal of the card, then the card network choice should be given to the card network. Now coming to the next question. So recently in the March month, the Reserve Bank of India has released the data regarding the progress of the NEFT and RTGS. So you have to tell that which of the data points are correct in regards to the progress that has happened in the NEFT and RTGS. So I hope you will be easily able to answer this question. We have discussed this already. Okay, so National electronic fund transfer system and the real-time gross settlement, they are being managed by the Reserve Bank. Is it correct? Is it correct? Are they managed by the NPCI or are they managed by the Reserve Bank of India? So remember that the NEFT and RTGS, they are being managed by the Reserve Bank of India. The IMPS is the system that is being managed by the NPCI. Okay, so that is the clarity that you need. So to settle the retail, so NEFT is for the retail transactions and RTGS, that is the real time gross settlement, that is for the wholesale payments. Now retail, the real time gross settlement, does it have a minimum transaction amount, and if it has a minimum transaction amount, what is that minimum transaction amount, that you have to tell me. Okay, an important landmark was reached in the journey of these systems with NEFT and RTGS. They started functioning for 24/7 365 days, that is for the whole year they will be working, and this started from December 16 2019 for the NEFT and December 14 2020 for the RTGS. Okay, though NEFT was issued, NEFT started working from 2015 and the RTGS, it started working from 2005. The NEFT, it started working from 2005 and the RTGS started working from 2004. But actually the RTGS was the one that was that started on the 24/7 365 day basis on the later period in 2020, while NEFT started from 2019 for the 24/7 basis. Okay, during the previous 10 years, the NEFT and RTGS systems have registered growth of 700% and 200% respectively in terms of volume. So in terms of volume, the NEFT is the one that is growing very fast, 700% in the last 10 years, that you can understand. During the previous 10 years, the NEFT and RTGS systems have registered the growth of 670% and 104% in terms of value. So in terms of value also, the NEFT is the one that is very growing very fast, we can say. RTGS system had processed its highest ever volume of 16.25 lakh transactions in a day on March 31st, 2023. So that is also correct. So here the only incorrect statement was the third one, because it should be 700% and not 500. Okay. So this is the answer. That is the C is the answer here. That was the incorrect statement. So NEFT was introduced in 2005. The RTGS was introduced in 2004. But the NEFT was the one that started working for 24/7 365 days from the 2019 onwards, and the RTGS was the one that started working on the 24/7 365 days basis from 2020 onwards. And NEFT is the one that is growing very fast, way faster than the RTGS, while RTGS is also growing at a good pace, we can say. Okay, so this is the complete idea about the RTGS and the NEFT. So the next news article is regarding the amendment that has happened in the master direction regarding the credit card and debit card. So you have to tell that which of the following statement is incorrect in regards to the recent notification of the Reserve Bank of India for the amended master direction in regards to the credit card and debit cards. So try to answer this. So this also we have discussed, the amended master direction, we have already discussed this. So for the purpose of card holders' convenience, so first of all, see, the credit card issuers, that can be banks or the NBFCs. So the credit cards can be issued by the banks as well as the NBFCs. So credit card issuers, they can partner with the co-branded partner. So they can partner with some non-banks, with some other bank for the co-branding. But this co-branded partner, it can only do the marketing of the credit cards. It can bring the initial consumers, but it cannot see any data. It cannot take any data from the customers. But for the purpose of card holders' convenience, for the customer's convenience, the card transaction related data may be drawn directly from the card issuer's system in an encrypted form and displayed in the co-branded partners platform with robust security. But this data will not be seen by the co-branded partner. That is, the information that is displayed through the co-branded partners platform shall be visible only to the customer and shall not be accessed or stored by the co-branded partner. That means the co-branded partner is only for the marketing purposes or for bringing the customers. they cannot see the data of the customer, they cannot see the transactions of the customer, and for that there is the security that they have to maintain. But in the co-branded partner platform, the card holder can see its own data, not the co-branded partner. Okay, so the first and fifth statement seems correct. If a complainant does not get satisfactory answer from the banks, from the NBFCs, that are the card issuers, so in this case, within the 30 days, if the card holder is not getting the satisfactory redressal of the complaint, then they can go to the Reserve Bank of India Ombudsman within 30 days, not 21. Now 21 days is for which platform? Anyone can tell me that? Recently we have discussed a new platform of a regulator that has 21 days timeline. Okay. So next is instructions relating to credit card shall apply to all the credit card issuing banks and NBFCs. No card issuer shall dispatch a card to the customer unsolicited. Yes, it is the scores 2.0, and that is the redressal mechanism of the SEBI, Securities and Exchange Board of India. Now through the scores 2.0, the redressal of the complaint should happen within 21 days. Okay, and the process has to be followed for within 21 days. But in the case of the Reserve Bank of India, RBI provides that your complaint should be addressed within 30 days. If it is not addressed within 30 days, then you can raise your complaint with the RBI Ombudsman. So that is the idea. Okay. Now one more thing, that this is the amendment for the credit card and debit card. Now the credit card can be issued by the banks or the NBFCs, but the debit card, can they be issued by the NBFCs? Now you have to tell me that the debit cards, can the NBFCs issue the debit cards? Can they? So the debit cards can only be issued by the banks. The NBFCs cannot issue the debit cards. Why is it so? Why is it so? Because anyone can tell me? So A has given the answer that no, the NBFCs cannot issue the debit card. The debit card can only be issued by the banks. Why the NBFCs cannot issue debit cards? Because the NBFCs cannot take demand deposits. They cannot take demand deposits. They can only take the time deposits with the minimum time of 12 months and the maximum time of 60 months. Okay, so tell me, what is the minimum and maximum? So we have discussed this. Yes, the NBFCs cannot take the demand deposits. They can only take the time deposits, that is for minimum of 12 months and the maximum of 60 months. If the timeline is incorrect, tell me in the comment section. Whatever I remember is that for the minimum of 12 months, they have to take the deposits, and maximum of 60 months. Okay, so that is the idea. So here it is written that the credit cards is given by the banks and the NBFCs, but the debit card shall apply. These instructions for the debit card, they only apply to every bank operating in India, because every bank operating in India, they can issue the debit cards. Okay, so this is the basic idea that we have discussed, that the co-branding partners, they should not have the access to the data, access to the transactions and such, but the co-branding partners, they can provide the data to the customer without seeing the data, without storing the data. So now next is card issuer shall be liable to compensate the complainant and address the complaints of the complainant within 30 days. Okay, within 30 days. If the complaint is not addressed in the maximum period of 30 days, then the complainant can go to the RBI Ombudsman, as easy as that. Okay, so this is the complete that we have discussed. Now next question is regarding the master direction for the credit card and debit card that has been amended. Now you have to tell me that which of the following option is correct in regards to the timeline. So let's say that you have said that I want to close my credit card or I want to close my card. So if that card is not closed within 7 working days, then there will be a penalty of ₹500 per calendar day of delay payable to the card holder. So this is the answer. C is the answer here, that failure on the part of the card issuers to complete the process of closure within 7 working days, then they will have to pay a penalty of ₹500 per day to the card holders. Next question is regarding, this is a very important news article. This is a very important notification of the Reserve Bank of India, and direct answer, if you know this, you will be able to directly answer this question. No complicated question can come from this, but direct question can come from this. So this is the question that RBI and Dash have come into a MOU so that they can build a framework so that they can use their local currencies for the current account transactions, for the permissible capital account transactions. Okay, I'm getting the answer D, that is Bank Indonesia. That is absolutely correct. The Reserve Bank of India and the Bank Indonesia, they have come into a MOU to make a framework, to establish a framework for the usage of the local currencies for the current account transactions, for the transactions for their trade, as well as for the capital account transactions, the permissible capital account transactions. Okay, it is Bank Indonesia, Bank of Indonesia, Bank Indonesia is written. Okay, next question is regarding the amalgamation of the Fincare Small Finance Bank with the AU Small Finance Bank. So you have to tell that which of the following statement is correct. Okay, so try to answer this question. So try to answer this question. So the Reserve Bank of India sanctioned the scheme of amalgamation under the powers contained in the RBI Act of 1934. Okay, so I'm getting the answer B. Is it correct? Yes, very good. So it should not be RBI Act, it should be Banking Regulation Act, Banking Regulation Act of 1949. Okay, so simply when we are talking about banks, it is usually the Banking Regulation Act that is being followed. So when you are reading the notification, be aware that which act is being followed here, that much you should be aware about. Okay, next is, in the scheme of amalgamation, Fincare Small Finance Bank Limited is the transferor bank that is transferring its asset, its branches to the transferee, that is the AU Small Finance Bank. So all the branches of the Fincare Small Finance Bank will function as the branches of the AU Small Finance Bank. So that is the idea. So second and third statements are correct, and that's why B is the right answer here. Okay. Yes, it is the Banking Regulation Act of 1949 that is being followed here in the scheme of amalgamation, because the two banks are being amalgamated. Okay. Next question is regarding the ways and means advances. So this is a static kind of question from the ways and means advances, but the ways and means advances, this has been given in detail in the current notification. So such kind of questions can come where you think that okay, this is a static question, but it is not a static question, because the ways and means advances have been defined by the RBI in its recent notification that was released in March 2024. Okay, so try to answer this. I'm getting the answer D. Is it correct? First and third. You have to find the incorrect statements. Is it correct that D is the answer here? So yes, that is correct. Good to see that so many of you are able to answer all the options, all the questions correct. So Reserve Bank of India may trigger fresh flotation of market loans when the Government of India utilizes 75% of the ways and means advances limit. Now ways and means advances is a way through which the Government of India can take the loans from the Reserve Bank of India. Now this is the loans that are for the short term or long term. Who can tell me that these loans are for the short term or long term? Next is Reserve Bank of India, in consultation with the Government of India, they set the limit as well as they can change, or they can change the limit, okay, in consideration to the prevailing circumstances. The interest rate on the ways and means advances is the repo rate, and if the overdraft is happening, then the rate will be 2% above the repo rate. So for the ways and means advances, the repo rate is the ways and means advances, the interest is repo rate, and for the overdraft, the interest rate is 2% plus repo rate. So yes, the ways and means advances, they are provided by the RBI to the Government of India for the short term. Very good. And the answer is D, that is first and third statements were incorrect, only the second statement was correct, and the RBI has provided this information regarding the ways and means advances in its notification, and this we have discussed in depth in our session, in our Finance 360-degree session. We have discussed this whole notification in depth. Okay. Now next question, try to see this question. So the RBI has released a notification, a press release regarding the investment by the banks or the regulated entities in the alternative investment funds. So what was happening that the banks, they were giving the loan to some entity X, let's say, and this entity X was defaulting in its payments. Then the bank, through some alternative investment fund, through some investment fund, was indirectly giving the loan to this entity X again, so that it can pay back the previous loan, and the bank do not have to show the NPA in its account. So the bank was giving extra and extra loans so that the entity can repay the previous loan, and the bank do not have to show the NPA in its account. So this was the kind of evergreening of loans that was done by the bank. So the RBI has said that the directions are there that were released in December 2023. Now there is a minor change that has happened in the direction. So first of all, downstream investment means that if the bank has given the loan to this entity X, then the bank is investing in the alternative investment fund, and if the alternative investment fund is doing the investment in this X entity, then if it is the debt that is being given by the alternative investment fund to the X entity, it will be considered the downstream investment that the bank is doing in this X entity. So downstream investment, it shall exclude the investment in equity shares, because if the alternative investment fund is doing the investment in the stocks, in the shares of this entity X, that means this is not a downstream investment, because you are getting a collateral kind of thing, you are getting some value that is in the form of shares, okay, of the debtor company, that is this entity X. But downstream investment shall include all the debt instrument that is being given, all the debt that is being given from the alternative investment fund to this X entity, that is the debtor entity, as well as all the other investment, including the investment in hybrid instruments, that is including the debt instrument, okay. So that means if the bank has done a exposure, has given a loan to this entity X, then bank is doing the investment in the alternative investment fund, that is again giving the debt to this entity X, so that will be considered as a downstream investment. That against this downstream investment, the provision has to be kept. That means the provision shall be required only for the downstream investment, only for the debt investment that the alternative investment fund is doing in this X entity. Okay, so provisioning shall not be required for the entire investment. Provisioning shall be required only for the downstream investment, that is further providing loans to this entity X. Okay, so investment by the regulated entities in the AIFs through the intermediaries such as fund of funds, the mutual funds, they are not included under the scope of the circular, because here the banks are not directly doing investment in the alternative investment fund. So if the banks are doing the investment through some intermediary, some mutual fund and such, so this will not come under this circular, under these directions. So here the second and third statements are incorrect, and that's why the right answer is D, that is 1 only, because we have to find the correct statement. We have to find the correct statement. Okay, so we have to find the correct statement, so only the first statement is correct, and that's why 1 is the 1 only, that is D is the answer. Okay, so we have understood that the provisioning in terms of the downstream investment, provisioning is required only to the extent of the investment that the regulated entity, that the bank is doing in the alternative investment fund, which is further investing in the debtor company, and not on the entire investment. So if the investment is happening in the debtor company, to that extent only the bank has to keep the provisions. Okay, if the AIF is investing in the other companies that are not the debtor company of this bank, then the provisions has not to be maintained. As easy as that. Downstream investment means these are the investments that are in the debt instrument. AIF, alternative investment fund, is doing the investment in the debt instrument for the debtor company, or is doing the investment in the hybrid instrument that includes the debt instrument. So these are downstream investment that excludes the equity investment. Okay, so this is the idea. Now the next question is regarding the SRO. So we have understood that the Reserve Bank of India has brought a framework for the self-regulating organizations for the regulated entities. So in the banking sector, in the NBFC sector, in the fintech sector, there will be the SROs, self-regulating organizations, that will be coming up. So they will connect these banks with the Reserve Bank of India. and they will connect the NBFCs. So for the NBFCs, there will be multiple SROs that can happen, multiple self-regulating organizations that can happen, that will connect the ideas of the NBFCs with the RBI, and they will be regulating these NBFCs so that they are complying with the norms of the RBI. Okay. So here the answer should be that see, the SROs must have some minimum membership so that they are reflecting, they are showing the ideas of the whole of the segment. Okay, it's not like that one bank is the member of the SRO and they are going to the RBI that we want this thing to happen for our sector. So that is not representing the whole of the banking sector. At least there should be some minimum membership that this SRO must have to represent the whole of the sector in front of the RBI. Okay, so that is the idea. So RBI has said that the SROs shall be SROs must maintain some minimum membership, and that shall be attained ideally at the time of making an application to become the self-regulatory organization, or at least not exceeding 2 years you have to gain that much of the membership. So the answer is A. Yes, everyone, correct. So the SRO must have some minimum membership to represent a particular sector. For a particular sector, there can be 2, 3, 4 many SROs that can be present for a particular sector like the banking sector, NBFC sector, but that SRO must represent the sector also. Okay, must have some minimum membership that can be attained during the time of registration or after, like within 2 years. Okay, so but not exceeding 2 years from the date of grant of recognition as a SRO. Now next question is again regarding the SRO. So try to answer this question. Okay, I am getting the answer. See, first of all, applicant for SRO shall be a not-for-profit organization that is set up under the Section 8 of the Companies Act of 2013. So that is correct. You have to answer that what is correct. Okay. The shareholding of the SRO should be sufficiently diversified and no entity individually or in concert shall have more than 10% or more than 10% of the shares. So that is the idea, that no single entity or no group of entities should have, no connected group of entities should have the shareholding of 10% or more. Okay, so no single entity or no connected group of entities, they cannot have the 10% or more than 10% of the shares. SROs shall submit an annual report to the Reserve Bank of India within 3 months of completing of the accounting year. So here the first and second statements are correct, and that's why A is the right answer here. Okay, so that is the idea. I hope you have understood that these are the eligibility criteria, that first of all it should be a not-for-profit organization set up under the Section 8 of the Companies Act of 2013. The 10% the shareholding of the SRO should be sufficiently diversified. That means one single entity or the group of connected entities should not hold 10% or more than 10% of the shares. And these are the other eligibility criteria that you can read. The next one is regarding the responsibility. So one of the responsibility of the SRO is to provide the annual report to the RBI that how the sector is working and such within 3 months of the completion of the accounting year. And the periodic interaction shall be done by the SRO with the Reserve Bank of India to tell that how the sector is working, what are the demands of the sector, and if they are complying, if the members are complying with the ideas of the regulator or not, the regulations of the regulator or not. So next question, it seems very lengthy, but if you know this news article, if you have read, like if you read one statement only, you will be able to tell the answer. So such kind of questions are seen in the examination, but you do not have to read the whole of the paragraphs and such, just read the relevant part and try to answer. So very fast you should be able to answer. Okay. So as well as tell that this is 13 and then give the answer A, B, C or D. So here the answer is absolutely correct. The answer is D. That is what has happened, that the Reserve Bank of India took over the board of directors of Abhyudaya Cooperative Bank Limited for a period of 12 months. And for the period of 12 months, the Satya Prakash Pathak was appointed by the RBI as the administrator of the bank to manage the affairs of the bank. Okay, a committee of advisors were hired that were having the 3 members to advise the administrator, that is Satya Prakash Pathak. Now these committee of advisors, they had 3 members. One of those members gone out of the situation, have moved out from the committee. So replacing that member, replacing Shri Mahendra, the Shri Devendra has taken the position of being the member of the committee. Okay, so this is the complete idea that the RBI had announced that RBI is superseding the board of directors of Abhyudaya Cooperative Bank for the period of 12 months. Administrator was hired. Who was the administrator? Shri Satya Prakash Pathak. And now these are the members. Before Shri Mahendra was the member. Now he has given up his position. So Shri Devendra has taken the position. Now try to give the right answer of this question. So recently in the March 2024, the annual report of the Ombudsman scheme has been released. So first of all, try to give the answer of this question, that do you know about the Ombudsman scheme or not? The integrated Ombudsman scheme that has been released. So are you aware about this scheme? So first of all, the scheme integrates the existing 3 ombudsman schemes, that is the banking ombudsman, NBFC ombudsman and the digital transaction ombudsman. The schemes adopt one nation, one ombudsman, so that there is no jurisdictional thing that is happening, and you can, even if you are from Delhi or you have a bank account in Rajasthan or you are living in Kashmir, still you can raise the complaint through this one ombudsman, one nation, one ombudsman, because it is jurisdictional neutral. There is jurisdiction neutrality that is present. Scheme also includes under its ambit the non-scheduled primary urban cooperative banks. Now you must know that what are the non-scheduled primary urban cooperative banks that are not included in which schedule of the RBI Act. So the non-scheduled primary urban cooperative banks are the banks that are not included in which of the schedule of the RBI, that you have to tell me. So the scheme also includes under its ambit the non-scheduled primary urban cooperative banks with a deposit size of rupees 50 crore and above. So this is the wrong statement. That's why C is the answer here. With the experience gained by the RBI from the launch and implementation of the RBI integrated ombudsman scheme, the credit information companies are also brought under this scheme, as well as the CRPC, that is the Centralized Receipt and Processing Center, that was set up when the scheme was released in November 2021. Okay, so this is the CRPC is set up in Chandigarh. Okay, yes, very good. The non-scheduled primary urban cooperative banks are the banks that are not included in the second schedule of the RBI Act. So all the banks that are included in the second schedule of the RBI Act, all those banks are called the scheduled bank. That's why there are the scheduled commercial banks, because they are included in the second schedule of the RBI. So non-scheduled means they are not included in the second schedule of the RBI Act. So now I have given you the complete notification regarding the integrated ombudsman scheme, so that you can read the nitty-gritties of the integrated ombudsman scheme. The PDF will be provided to you in the Telegram channel of the EduTap, and tomorrow is the holiday of the employees, so you can understand that you will get this PDF by Monday to 12 p.m. Till then you can take a screenshot also. So this is the complete idea regarding the integrated ombudsman scheme. So the next question is regarding the annual report that has been released for the Reserve Bank Integrated Ombudsman Scheme. So the first annual report for the Integrated Ombudsman Scheme has been released by the Reserve Bank of India on March 2024. So you have to tell that which of the following is correct. So under the Reserve Bank Integrated Ombudsman Scheme, 7 lakh complaints were received at the offices of the Reserve Bank of India Ombudsman and the CRPC, that is the Centralized Receipt and Processing Center, between April 2022 to March 2023, showing an increase of dash number of complaint, dash percentage of the complaints over the last year. So absolutely correct, 68.24% of the increase has been seen in the complaints as compared to the last year. So absolutely correct, everyone. Next question. So this is the highlights of the annual report, that under the Reserve Bank of India Ombudsman scheme, there is the increase in the complaints that have been received. So try to answer this next question, that is again from the annual report of the Ombudsman. Okay. So around 85% of the total complaints were received through digital modes, including on the online complaint management system portal of the Reserve Bank of India. So there is a CMS portal of the RBI, email, and the centralized receipt and centralized public grievance redressal and monitoring system. So that is correct, that 85.64% of the complaints were received in the online format. The overall disposal rate for the year at the offices of Reserve Bank of India Ombudsman stood at 97.99% with an average turnaround time of 33 days. Okay, 33 days. Majority of the maintainable complaints were disposed of under the Reserve Bank of India Integrated Ombudsman Scheme 2021 were resolved through the mutual settlement and reconciliation. So that is also correct. So here the first and third seems correct. You have to find the incorrect statement. So only second one is the incorrect statement, and that's why E is the right answer here. Yes, everyone has given the right answer, that is E. Okay. So the highlights, as I've told you, that these are the important highlights, that first of all, around 85% of the total complaints, 86% of the total complaints were received through the digital modes, through the CMS portal, email, that is through the CRPC we can say, and through the CP Grams, that is the system of the Government of India, that is the portal of the Government of India. Okay. Next is the overall turnaround time was 33 days and the overall disposal rate for the year at the offices of the Reserve Bank of India Ombudsman was at 97.99%. Majority of the complaints were resolved through the conciliation and mediation. Okay. Now coming to the next question, that is regarding a very easy question, that the IIFL Finance Limited, the RBI has imposed some restrictions on the IIFL Finance Limited regarding the dispersal of which kind of loans. So that you have to tell me, and we have discussed this. So very easy to answer, regarding the gold loans. Okay. So the Reserve Bank of India, in the exercise of its power under the Reserve Bank of India Act 1934, has directed the IIFL Finance Limited to cease from sanctioning or dispersing the gold loans. So that is the idea. Now coming to the next question. So this is the question. I will tell you a point that you need to remember, that when you are seeing the quarter data, the quarterly data is usually not important, especially the quarters of this time. If the quarterly data has been recently released before the examination, then you can go through it. But otherwise, the quarterly data is not important. But when it comes to the balance of payment data that has been released for the 6th month, for the April to December. So this is the balance of payment data that is released for the period of April to December 2023. So this is a 6-month data that is released in March. So next, from January to July, June. From January to June, now the data will be released around September. So till then your exams will be over. So till then, this is the data that is actually relevant. That's why I have brought this data, that at least you should have the basic of the idea about the important points regarding the balance of payment for the April to December month, for the 6-month time period, because here you will get to know that how our foreign direct investment is doing, how the FPI is doing, how the trade is doing for our country. Okay, how much trade we are doing with the other countries. So this much of the knowledge you should have for the descriptive point of view, also from the examination point of view. Okay, so India's current account deficit. Now current account, anyone can tell me that what are the components of the current account. So in the current account, what are the components of the current account? Anyone? What are the components of current account? So there is the trade in goods, that is included in the current account. There is the trade in services, that is included in the current account, as well as what is included in current account, the transfer payments are included in the current account, that is the remittances, the grants, that is included in the current account. So balance of payment means that how much we are interacting, like how much of the economic transactions are happening with the other countries, with the rest of the world. Okay, so current account includes the trade in services, the trade in goods, the transfer payments with the rest of the world. The capital account includes all the The capital account includes all the assets and the liabilities. How much we are investing, how much is the investment happening in our country, how much we are investing in other countries, how much of the liabilities we are happening, how much of the borrowings we are taking from the rest of the world, how much borrowing we are providing to the rest of the world. So that is all included in capital account. Okay. So current account deficit has reduced. So that is a good thing that our current account deficit has reduced. That means deficit is first of all what? That how much we are spending minus how much we are receiving. So we are spending more dollars than what we are receiving. Okay, we are spending more dollars than what we are receiving. But our deficit has reduced. Our deficit has reduced. So that is a good information that from, let's say, from 100 crores, our deficit has reduced to 50 crores. So that is a good information for us. So our deficit has reduced from 2.6% of the GDP to 1.2% of the GDP. So that is the idea, that from 2.6% of the GDP, our deficit has reduced to 1.2% of the GDP. So that is a good information. Net invisibles. Net invisibles means that the trade in services and the transfer payments. So these are the invisible transactions in the current account. In the current account, trade in goods is the balance of trade. In the current account, the trade in services and the transfer payments, they are the invisible transactions. So net invisible receipts were higher during the April-December 2023 than the previous year, primarily on account of services and transfers, because they are the part of net invisibles. Net FDI inflow was at US dollar 8.5 billion during the April-December 2023, which was lower than the previous year, and it was way lower than the previous year. So that is a problematic thing for our country. We can say that the FDI is reducing, the net FDI is reducing. Okay, so net FDI is reducing. Net FDI means that the FDI that is coming in minus the FDI that is going out. So what can be the problem here? That we are doing too much of the investment in other countries. That's why also that net FDI could be showing as decreased. Okay, net FDI means how much FDI is coming inside our country minus how much FDI we are doing in other countries. So if we are doing too much of the FDIs in the other country, if we are doing too much of the investment in the other countries, the direct investments, that can also be problematic because we are sending too much of money outside. Okay, that could be reducing this number also. That FDI is coming less in our country, as well as we are doing too much FDI in other country. So that can be the problem here. During April-December 2023, the portfolio investment recorded a net inflow of US dollar 32.7 billion as against the outflow of 3.5 billion. So this is good that at least our foreign portfolio investment is manageable. It is like more money is inflowing than going out. Okay. In April-December 2023, there was an accretion. That means the RBI has accumulated US dollar 32.9 billion to the foreign exchange reserves. So our foreign exchange reserves have increased by $32.9 billion. So this is the data for April to December. The 6-month data are usually important for the balance of payment only. Okay. So next is that this is the homework question. So this is it, that we have completed all our questions. For today. Now coming to the homework question, I hope you will be easily able to answer this question if you have seen the session on the annual report of the Ombudsman scheme. If you are not aware about the data points, if you do not have the understanding of the annual report of the Ombudsman scheme, I have taken a complete session of 1 hour on the annual report of Ombudsman scheme, where we have discussed the important data points of the Ombudsman scheme. Okay, for the annual report of Ombudsman scheme. So this is the homework question. I hope you will be able to answer this question. Now another big announcement from EduTap, that we have the Ask Us Anything on Monday. That is coming Monday only. We are having the Ask Us Anything, where you can ask us the questions regarding the strategy, sources, revision and retention, regarding the complete current affairs, regarding the ESI current affairs, the finance current affairs, the reports, schemes. If you have any question, you can ask regarding them in the coming session. Okay, that is on Monday 2 p.m. So remember the time and date, that is on 2 p.m. 6 May, that is on Monday 2 p.m. You can have this session with us. That is the Ask Us Anything. You can ask any of your doubts with us. Okay. So this is it from my side today. I hope you will be joining us on Monday and asking all your doubts that you have regarding the preparation, regarding the strategy, the sources that you should focus on, and the revision, how to do the revision, the retention, and all these questions you can ask us in the session. Okay. Now you can join the Telegram channel for the PDF of the session. So the PDF of the session will be provided to you in the Telegram channel, but as I have told to you that it will be provided to you on Monday. Okay. Now this is it. Thank you very much. This is the end of my time with you all. I hope you have enjoyed this session, and do comment down below. But do comment down below in the comment section also that if you are liking the sessions, and do tell me that how many marks you have got out of 18, and do give me the right answer of the homework question. Okay, so I hope you are enjoying these sessions. Now a special surprise for you all, that on 10th of May, that is the next Friday, most probably, I will be bringing the session for January, February and March. So we will be revising all the important RBI notifications and the press releases. That is for the 3 months. Let me tell you, I will not be explaining anything in that session. We will be having a rapid fire kind of session in that session. Okay, so the January, February month, I have taken the separate sessions for them. That was literally 1 hour long. But this cumulative session, I will have a rapid fire in this because I have explained a lot of all the topics. Okay. IIP is, I guess, released for the 3 months. So that is for the 3 months. So leave it for now. See if near the examination the recent one is released. If that is released, then you can do it at that time. Okay. Yes. So that will be a rapid fire. I will not be explaining anything. I am warning you right now. I will warn you in that session also. So that will be a rapid fire session for the January, February and March, where we will just have the session. Okay. So do tell me that if you want a rapid fire one or you want the normal session. I want to take it in the form of rapid fire, but it depends upon you also that how you want it. So you can inform me regarding that, and do tell me that in the comment section. Do tell me that you are liking the sessions or not. And if you have any query, you can comment down below. I will explain you there also. Okay. So this is it. Thank you very much. Thank you for joining the session. I hope you enjoy your